Stocks are green this morning, but the message underneath is not as clean as it looks. The market is trying to act confident, led once again by the AI trade, while Bitcoin is still struggling under the 60,000 level and ETF flows remain weak. That split matters because real risk-on markets usually lift more than one corner of the tape. The thesis is simple. This rally is not about easy liquidity everywhere. It is about Wall Street crowding into the one story it still trusts. What just happened is a classic morning trap for investors. Futures can look calm, headlines can sound constructive, and the Nasdaq can still lean higher because AI keeps absorbing attention and capital. But at the same time, the dollar remains firm. Rate hike expectations are still part of the conversation. Gold is under pressure, and Bitcoin is not confirming the same optimism. That is why this market feels strong on the surface, but much more selective underneath. The key is liquidity, not just price. When money is abundant, speculative assets usually move together. Tech, crypto, high beta, and sometimes even gold can all find buyers. But right now, the market is behaving more like a capital rotation than a broad expansion. At the calm metrics, this is exactly the kind of tape we watch closely because price is the surface, but liquidity is the message. The mistake many viewers may make this morning is assuming that a green stock market means fear is gone. It does not. A market can rally while still becoming narrower, more crowded, and more dependent on one dominant narrative. If AI is carrying the indexes, while Bitcoin loses institutional demand and gold gets hit by the stronger dollar trade, then the real question is not whether stocks are up. The real question is whether the rally has enough confirmation outside the AI complex. So the takeaway before the market opens is not to panic and not to chase the headline. Watch whether Bitcoin can reclaim strength, whether ETF outflows start to ease, whether gold stops breaking down, and whether the dollar or yields keep tightening the pressure. If those signals improve together, the rally becomes healthier. If they do not, then today's green open may be less of an all-clear signal and more of a warning that Wall Street is still choosing winners very carefully.